it. But look, this is an evolving situation.
Okay, all right. It is. Sanjeev, thank you very much for your time. Pleasure speaking with you, and good luck. Thank you for speaking to CNBC TV this morning.
Thank you so much.
Thank you.
Thanks.
All right. Well, 120 points higher. There is so after hitting the level, basically the markets reversed exactly from the same level that it reversed yesterday, which is 17,220. Got to within a few points of it, and then sold off. So 17,164. This is still a pretty good outcome so far, but let's hope there is more to go here in terms of gains and recovery, basically recovery and repair. Now, Motilal Oswal note indicates that the upcoming dedicated freight corridors are expected to change the modal mix of freight movement in favor of railways from roadways, and factors such as higher costs of fuel, expensive insurance may give a boost to rail freight in a pretty big way. The sort of DFC, of course, has been debated for years, but now it's coming to fruition. Let's discuss the trends and how managements and companies see this impacting their business. Vineet Agarwal is Managing Director at Transport Corporation of India, and we have Vikram Suryavanshi, Vice President Equity at PhillipCapital, joining in. Gentlemen, great to have both of you here. Thank you very much for your time. Vineet, if I can start by asking you to just first up respond to what I prefaced this conversation with, which is that Motilal note and how they see the DFC impact being a big fillip to the rail sector. Your thoughts?
It's good to be back here again. Thanks for having me. I think this is a really important step in the country's evolution today. We all know that the railways only moves about 25% of freight in the country, whereas the road moves between 60 and 65%. So clearly, this is not right for the country. If the country has to be more competitive, whether it is domestically or for exports, we need to change this mix. We need to get the logistics cost down. And any shift that happens either from road to rail or from road to sea or to inland waterways, all the other modes of transport is definitely going to reduce the cost of transport in the country. Simultaneously, I think the other factor that's starting to play around why cargo needs to move from road to the other modes is the GHG, is the emissions factor. Clearly, companies looking at ESG have to start looking at how to reduce the carbon emissions. And clearly, when you're moving from road to the other modes, that does reduce it as well. So clearly, I think the trends are very obvious, and I think the industry has to start adopting to it, as well as companies have to start using different modes of transport.
Okay. Good morning, Vineet, and thanks for joining in. In fact, Vikram Suryavanshi, who is the analyst at PhillipCapital, is also here with us. And, he wrote a report way back in September of 2022, which talked about the impact that the national logistics policy would have in terms of, improving last mile connectivity, reducing logistics costs, etc. Vineet, I wanted your thoughts on that. There are still a lot of issues that need to be resolved with respect to whether it's logistics capacity, last mile connectivity, ground level infrastructure. What do you think are the top 2 or 3 things that the government needs to do now in order to improve and resolve those challenges, just to improve, sort of last mile connectivity in the logistics space?
There are 2-3 factors which are important for this connectivity to be seamless, because, you cannot just absolutely move everything to rail. There is always a first mile and a last mile, which means that there is a road element also involved in some way. So there has to be a seamless transition between different modes of transport. So one is clearly the physical infrastructure, which is the hard infrastructure, the infrastructure that is getting created under the PM Gati Shakti program. That multimodal infrastructure, which will be the connecting infrastructure. So there could be ICDs, there could be multimodal logistics parks, there could be road networks that are linking the railway networks or the seaports more effectively to the overall country. Those will be the hard infrastructure. The second is the soft infrastructure, which is essentially what we call the connectivity from a digital perspective. And the government has already started work on ULIP, which is the Unified Logistics Integrated Platform, where all the stakeholders involved, whether it is a road service provider, a rail service provider, any other digital service providers, customs, all of these will come onto a single platform. So there is work started both on the hard infrastructure and the soft infrastructure. And clearly this is evolving in the next few years. So I'm very confident that this will help. These points will definitely help in the shift.
Okay. Vikram, let me bring you into the conversation as well. The railways are getting extremely aggressive. I mean, we're seeing that in the volumes right now, container volumes, the data, and obviously they have extremely big plans. I mean, the kind of ordering that's going on in the years to come. So is this threat real? The threat to road freight from rail freight? And if yes, then will the listed universe companies see any pressure on just business growth?
Thank you and good morning. So if you look at the container side or rail side, in fact, container things, as Vineet said, in fact, situation is really worse. In fact, we are seeing less than 10% of cargo goes by railways for container. And most of the railway network is used for the passenger movement. And we have very limited space available for the cargo movement. And the kind of infrastructure improvement we are seeing in railways happening will definitely bring back some cargo on the railway, but we do not see as a threat to the road. A road has its own advantage in terms of complete end-to-end transportation, and the unit economics for smaller cargo is different. But I think there is a lot of cargo will, particularly on container side, will move back to the railways post the Western DFCC is there. Already we are seeing some benefit for Mundra and Pipavav Port. So that structural change can remain for much longer time, and probably the kind of container penetration which is between road and rail probably can shift to the rail side with this DFCC. But clearly, I think both the routes have their advantage, so we do not see as a competition to the road side, and road side will also continues to grow.
Got that point. So just if you could translate that into your view on the stocks, which are the biggest beneficiaries, or which will be the biggest beneficiaries, you think, in terms of just overall increase in freight, whether it happens on railways or on roads? Which stocks are you most bullish on?
Yeah, surely. So if you look at the container play, we are having a container corporation, when is the largest player, who controls almost like 60-65% market share. Then we have Gateway Distripass, and even TCI Limited has a joint venture with Concor for rail movement. So these are the stocks which will see the advantage of container trains basically. And along with that rail, we are also pretty sure that the kind of growth we'll see in container is going to be very secular, because if you look at overall penetration in India is very less. We are talking about hardly 20 million TEU container volume, which is expected to go almost like 40 million TEU by 2030. And I think container is one of the global way of moving cargo, which I think will start following up in India, so with the infrastructure picking up. So I think there is these are the companies which will benefit from this secular growth rate in container logistics and rail movement.
Vineet, freight is about 50% of your business, right? And the majority within that is part truckload. How is that business doing? I think you had indicated some softness in FY24. I mean, with lots of elections, etc., being a factor as well. Can you update what's happening?
So on the company front, I think things are quite okay. I think FY24 seems to be okay so far. There could be a little bit softening towards the end of the year, but I think it seems to be still okay. And the LTL sundry business is also growing quite rapidly. So I think that is a positive sign. Broadly, I think I just want to take Vikram's point forward also. I think the fact that there is so less containerization in India, and that's the third pillar of the national logistics policy, which is multimodal logistics, digitization of logistics, and thirdly, standardization of logistics. So you see all different types of trucks in the market, and essentially it's because the cargo is not standardized. It's not put into containers. And once that starts happening, we will see a bigger flip to not just the road transportation business being more organized, but also, and in turn, a business like ours getting positively impacted, but also that shift will happen from road to rail.
Since you're giving us some numbers, you said there could be some softness in demand in the near future, but for FY25, you had a revenue target of 2,000 crores and 20% margins. Would you stick to that despite the near-term challenges that you may face?
I think you're talking about specifically about the freight business in our thing. So yes, that we will stick to that those targets.
Okay. All right. We will leave it at that. Thanks a lot for joining in and giving us an update on the freight business and the overall, industry as well. Vikram, thanks to you too. Well, let's get back to the market now. We have the market that's come off quite a bit. So Mitesh Thakkar is joining in to give us a quick call on the index. Mitesh, the market has lost a little bit of steam from the top. So that high we hit was somewhere around 70.